Good evening, folks. This is your ticker guy coming at you from Niceville, Florida. And I wanted to talk to you tonight about El Bucko, otherwise known as Bucky or the US dollar. I wanted to do this to show you what's going on with our stock market and relate that to purchasing power in terms of things that you need to buy that come in from overseas. Most specifically, very interesting things like oil, which is, of course, turned into gasoline. Yeah. Okay, as you can see, here's the S&P 500 as of the Friday close at 1331.10. It's right here. And here is the dollar on a relative basis. Now, why is this important? Well, because not all that long ago, back here, the S&P 500 was at 1331, and the dollar was a little bit higher than it is today, or was on Friday. Then we had 1331 back here, and the dollar was higher. We had 1331 back here, and the dollar was higher. And we had 1331 about right here, and the dollar was much higher in February. From there to there. And yet the stock market has done absolutely nothing during that time. No, it's been up and it's been down, but on balance, it's done nothing. So what we've done here, folks, over the last year or so is we have bought an advancing stock market with destruction of your purchasing power. And if we take a look at this and we do DXY, which is, of course, the dollar, you'll see this correlation is right here. Here's the actual line itself. And the reason that this is so important is we can actually look at where this came from. Back at that time, we were trading at about 89. And today, as of Friday, we're trading at 74. Well, that's pretty easy to figure out exactly how much purchasing power you've lost. The answer is very close to 20% from here to here in terms of international goods. And you say, well, but the stock market has gone up. And I say, well, yes, it went from 1100 to 1330. Okay, so 1100, 120%. And gee, that's 1320. Awfully close, isn't it? So as the dollar's purchasing power has gone down, the U.S. stock market has gone up, but in fact, it's only gone up numerically. In terms of actual improvement, the stock market hasn't gone up at all. Well, that's a little bit of a problem, though, because, you know, oil was, a year ago, $74 a barrel. And 120% of that would be $88 a barrel, or right here. But wait, oil is $101 a barrel. A little bit of a problem here, right? Oil's going up faster than the dollar is declining. That could be a little bit of an issue. Then we have other things. We have, for example, wheat. Wheat was $4.25 a year ago. Here's our dollar declining. Here's wheat at $4.25, now at $7.97. Well, $4.25, 120% of that is $5.10, which is right here. Well, but wheat's almost double where it was a year ago. We have corn, which was $3.32 and is now more than doubled instead of being up here around 400. See, folks, the problem with all of this give the free money away thing and debase the currency is that the impact on things that go into what you need to buy is not linear. In fact, it's nowhere near that. Let's take a look at another example. Here's cotton. Cotton was 70, let's see, about 80, okay? Well, it has doubled too. It was even higher than that at 219, but it's doubled as well. And yet, again, 120% of that original value should only be 96 bucks. Should be here. You can look at commodities throughout the world, folks, and this is what you see. I can look at, for example, copper, 272 to 417. Not quite a double, but again, 120% is 326, which is right here. So as you look at what's going on around you, as you go to the grocery store and you see prices going to the moon, as you go fill your gas tank up for well over $3.50 a gallon basically everywhere, diesel pushing $4 a gallon essentially everywhere in the United States. Take a look at what's going on in the markets, folks, because everything that you're seeing here, all of it, is being caused by the economic and fiscal monetary policies of our Federal Reserve and our government. It's not very hard to figure out. You just need to look at the correlations. The fact of the matter is that the so-called wealth effect that Ben Bernanke likes to crow about, making the stock market go up. Stock market hasn't gone up at all. Not in purchasing power terms compared to the dollar. Hasn't risen at all. It's risen at the exact same rate, almost identically to that at which the dollar has declined. But all the things that you need to buy in order to live have gone up much faster. 50%, 75%, 100%, where the dollar has declined by 20, and stocks have gone up by 20. Success, quantitative easing too? No. No, not for you, not for the average American, and certainly not for those people who don't have a great deal of wealth and don't have any presence in the stock market at all. Here it is, folks. Facts are what they are. Have a good evening.